joined Rabobank research team in 2011. He has an in-depth knowledge of local and global dairy markets and how dairy supply chains function. He holds a bachelor's degree in international trade from the Victorian University and a postgraduate degree in diplomacy and trade in Monash University. So please welcome from Melbourne, Michael. Thank you.
Thank you. So hopefully you can see my slides now and the title of this presentation, and I'll certainly only try and stick to 20 minutes so we can allow a bit of Q&A before you move on, but clearly talking about the road to recovery and how is the global pandemic impacting food markets. But before I get into things specifically, I will just talk about a little bit more detail around where I fit into things. So as you heard there, I'm part of a global research team. Most of my time with the bank has spent covering the dairy markets, but we do obviously have a global team that cover all the different commodities there. So you can see on the left-hand side and the right-hand side how we structure the bank globally, particularly around research. And clearly for the audience there, I think the key sectors are clearly going to be the agri-commodity markets team. They're the team based in London that cover a lot of the grains and oilseed complex globally. But of course, that's complemented locally with our grains and oilseeds coverage by Cheryl Kalish-Gordon here on the East Coast. But there's all those other sectors that we have research teams around, and I'm part of that local team for the Australian New Zealand business. But we have reporting lines into our global structures as well. So it's quite a unique resource that the bank does have, given we are, we pride ourselves on being a food and agri bank only and supported by knowledge and networks. So that's part of the research component. And then clearly our roles are in these sectors to understand what's going on in the markets and the supply chain and channel that out to our clients, our various clients around the supply chain, around what it means to their business, and it's quite a good resource. And hopefully some of you are Rabobank clients and getting access to some of that. And there are obviously research papers that we do provide more broadly than just our client base. But that's sort of where I fit into things. Excuse me. Look, we need to talk about infection rates globally around the world, because clearly, here in Australia, we've done a great job in terms of containing the virus. Putting the Victoria issue aside, most of the country's done a great job, WA in particular. But, we're still looking at global food markets and understanding that there's still a significant issue around the rate of infection around the world. And this is just a chart I just got off the European Centre for Disease Prevention just a couple of days ago, and it just shows you the average daily rate or reported new cases by continent. And I think the point here is that we're not seeing an escalation in the total number of daily reported cases of COVID-19, but we're certainly still seeing very, very high numbers. If you look at the language that we're seeing coming out of the World Health Organization, is clearly they're not using the language that the virus is under control, and there's certainly still hotspots. And we talk about Brazil, India certainly being hotspots that are still trying to contain the virus, and certainly there's still issues around second waves in certain markets around the world, and there's no greater example than what we're seeing in parts of Western Europe at the moment, dealing with significant second waves, and even most of the US is dealing with second waves. So I think it's a worthwhile reminder that while we've done a great job in most of Australia, it's still a significant issue for a lot of countries around the world, and we're seeing some big numbers coming out in terms of daily infection rates, and of course that's having an impact on government responses, which I'll talk about shortly. And look, just in terms of context for WA, it is worthwhile noting, and I think this is a real positive in all this, is that we are, when you're looking at key export markets, there's certainly some of our key export markets that are doing a better job than most. And this is just some, individual country data that I got off the Johns Hopkins University website, and it just shows you, just as an example for some WA export markets, that clearly there's still issues in certain markets and some second waves. If you're looking at these, Asia-Pacific markets that we're talking about here, but broadly speaking, when you look at it compared to what's going on in the Northern Hemisphere, most of our markets in Asia have got the virus under control. But yes, clearly there's been second waves. There's still risk of second waves in some of these markets, but these economies are doing a lot better in terms of containing the virus. But it does lead to the point around, clearly the impact that we're seeing in terms of government response and consumer response to all this is we're in a fairly dire situation when it comes to the global economy. So these are this is just historical global GDP growth by calendar year over the last couple of decades. And it just shows you how severe that drop in global GDP will be in 2020. Now that's our forecast. It's just around 4%. There are other commentators that suggesting the number might be a little bit worse. There's some that suggesting it might be a little bit better. But I think there's a broad consensus view, that the global economy is going through one of its worst economic recessions that we've seen, and particularly a lot worse than the GFC that we had back in 2008 and 2009. And we're seeing that play out in various respects in terms of our key export markets. Clearly China's doing a great job in terms of managing the virus itself, and they did avoid recession. And their economy is really first in, first out. So we are seeing positive signs in terms of GDP numbers coming out of China. We're seeing some good signs in terms of food market recovery, which I'll talk about as well. So not surprisingly that they're doing better, but it is still quite a weak China economic number at the moment. It's growth of 1% in 2020 and a recovery in 2021. The couple of points we'd make here is clearly most economies are past the worst of it. Quarter two, so April through June was the worst quarter because that's when most of the world was in lockdown. So the recovery is underway, but it is going to be a patchy recovery, and it's going to depend on second waves and what sort of government restrictions we see being reinforced, which is clearly what we're looking at right now in the Northern Hemisphere as well. So we are on the road to recovery from a global economic position, and you can see there the forecast around 2021 is for a very good bounce back in terms of global GDP. And it has been encouraging in the sense that we saw 2 weeks ago the OECD, who's quite a preeminent economic commentator organisation, they actually revised up their growth expectations for 2021. So that was the first time in a number of months that economists and experts in this space were revising up, not revising down what they're expecting to happen in 2020 and 2021. So I took that as some encouragement. But even with a good bounce back in 2021, there are going to be a lot of economies clearly around the world that are going to be still smaller than what they were coming into the COVID-19 crisis. And the Southeast Asia markets are an example there where they've got some headwinds. They rely heavily on tourism. There's also been a big capital outflow into some of those markets. They've got weak domestic market consumption, and they've got weak export sectors because China's been sluggish. So, most of our export markets, while they've done better containing the virus, are still going through some economic challenges. So, it's a bit of a watch that space, but we know that feeds into food and beverage markets, particularly in offshore markets, because they are more price sensitive when it comes to, discretionary spend. Some of you will probably be familiar with this story, but it's just an interesting way of sort of showing you the effects of how COVID-19's impacted food and agricultural markets. And not surprisingly, if you go right back to the start, clearly when most consumers are in lockdown, we see that pantry loading from consumers. There's a lot more consumption taking place at home. And then you get that impact between the recovery and the outbreak where the food service channel gets hit hard, a lot more eating at home, there can be some supply chain disruptions. And of course what you're seeing is food and beverage companies trying to adjust their business models to deal with the fact that they've lost a big chunk of their food service market, but have had a good bounce back in retail sales. So there's a lot of agility issues there along the way. But then you get to that recovery phase where, consumers are starting to go out and eat out again, but they are a little bit cautious around that, and there can be clearly restrictions in terms of capacity restrictions in the food service channel. But the thing we think is to play out in terms of a lot of food markets around the world is the income impact of the global recession. And we do know that, there's been a lot of fiscal stimulus through the first 10 months of this year to support economies and consumers around the world. A lot of that will be winding back in the months ahead. So we are still expecting to see some pressure on demand for food and beverage in export markets around the world as they deal with the full impact of being in deep recession and government fiscal stimulus winding back. Just looking closely at home at how that actually looks in a chart in terms of the impact of food service versus food retail. So this is some data we get from the ABS on a monthly basis, and it's just trying to track the annual change every month for the different channels, whether it's food service or food retail, and then you can net out a sum of those two figures. it just shows you at the height of the crisis, when most of Australia was in some sort of lockdown, the food service channel was seeing 50% drops in sales through the worst of that period. At the same time, you had that pantry loading pickup that you can see there. But as you move through sort of the impacts, you can start to see things finding a new normal. So the food service recovery begins, but again, we're not back to pre-COVID levels yet. And of course, you've seen a bit of a dip off in the last data there in August 1, because Victoria's still in lockdown. But there's been some restrictions coming back into force, and consumers just starting to be a bit cautious about going and eating out of home. And you see more normal consumption patterns and retail sales through food sales there. But it has all resulted in a net result where the amount of consumers in Australia, at least, spending on food has actually increased through the last couple of months, despite the drop-off in the food service channel. So it does point to a positive picture, simply around consumers still needing to eat food and wanting to spend money on food at home. When you look at how that compares to other markets, so again, this is this similar sort of data, but it's just looking at the food service channel, and it looks at just two markets as an example. And we've got China there, and we've got the USA there. So the first point I'd make here is clearly it shows you a similar trend. At the height of the shutdowns that these countries are going through, you see big hits to the food service channel. And in fact, because of the nature of how restrictive they were in China, that food service channel was down at over 70% through the worst of their crisis. In the US, it was probably a bit more reflective of what we saw here in Australia. But again, China's first in, first out, and on the road to recovery. And if you complemented some of this data with what we're seeing, some of the publicly listed food and beverage companies that have a quick service restaurant business or a food service business, like Starbucks in China, like Yum, who own Pizza Hut and KFC, these sorts of companies, they are supplementing this data, suggesting that they do expect their numbers and their same-store sales numbers by September to be back to pre-COVID levels. So that's a pretty good result for what the recovery might look like in China. It would be a 6 to 7 month recovery period. But clearly there's a key focus in what's actually going on in other markets around the world. And the US is a good example there, where they are in recovery mode. But it's going to take a little bit longer because of the weaker economic settings there. And we do know within this channel that, some parts of the segment perform better than others, and it comes back to that point around agility. Businesses that could quickly pivot and increase their takeaway or delivery platforms really did succeed well, and there's certain, quick service restaurant chains that perform better than others, like, not surprisingly, McDonald's and Pizza Hut and Domino's, because they already had food delivery platforms and they had, takeaway platforms. So there's certain, we recognise within this food service channel that some parts of the segment are actually doing a lot better than others. But broadly speaking, it's still, a patchy recovery. Look, this chart might be really difficult for you to read on there, and I couldn't get the raw data behind it, but it's just a chart that the ABS started producing last month that looks at, this is back at looking at supermarket sales in Australia only, and it looks at the year-on-year change by colour code. So the darker the red there, the bigger increase we've seen in terms of the consumers spending through the retail channel on that product. And look, I just thought it was an interesting chart because it really does sort of reinforce some of the things we're seeing around a bit of a shift in consumer behaviour. I mean, clearly, as you would know, we're seeing a lot more home cooking and baking. So things like flour and long life milk and cooking oil, these sorts of things are doing really well. Cleaning products are obviously selling, shooting the lights out as well because everyone's looking to stay safe. But it does you can sort of look at some of the other trends around, fish and seafood doing well, convenience and snacking products doing really well. But of course, things like confectionery and baking goods haven't done as well. So it's sort of a point there around, we know consumers are doing a lot more home cooking, but there's still a focus on health and wellness, wanting to, at least have healthy diets through the lockdown there as well. So I just thought it was an interesting chart worth throwing in there, because we do know that, consumers in Australia will be tightening their belts to a certain degree, but certainly we're not price sensitive here in Australia as we are in some of our export markets. Just beyond those sort of product categories and what's doing well, clearly you might all recognise that there's clearly been a big shift to online food sales, and that trend was already underway. But if you looked at what some of the retailers are saying, if you looked at what some of the delivery partners are saying, like Uber Eats, or if you looked at some of the meal kits like Marley's Food and these sorts of companies, they're all reporting exceptional growth in their online businesses and platforms, and they are talking about getting access to new customers that are willing to try and needing to try online delivery. And in particular, the retailers like Coles and Woolworths have reported significant jumps in their customer retention in terms of online delivery. So that's certainly a global trend we've seen. I mean, there's a bit of a change in eating occasions. People are doing a lot more, as I said, home baking, but there's a lot more snacking still that's taking place through the day. But of course, we do know in the background to all that there is that flight to value because consumers are tightening their belts around the world. And if you looked at some of the company results for retailers, they are talking about, big product launches in terms of private label, and their private label category is doing quite well because consumers do look for value. Now, it's not to say that consumers don't place great value on other value propositions, but we do know that private label products in a lot of markets around the world has got a bit of a kick up because of the economic settings in the background to all this. Look, beyond all that, clearly we know, it's been a difficult, 10 months to the year for most markets around the world, whether it's a currency market or an equity market, but we know, broadly speaking, that commodity markets, agricultural commodity markets haven't been immune to all this. This is a chart, look at just a whole range of different commodities, and it's reported in Aussie dollar terms. So the first point to note there is that we know that, fortunately, we have had a weaker Aussie dollar through the first part of this calendar year, which is obviously supportive of export returns. Now it's bounced up and down more recently, but it is broadly lower than what it was 12 months ago. We are of the view that we think it will drift lower again into below 70 cents in the coming 6 months. So that's supported commodity returns. But, when you're looking at supply and demand fundamentals for whatever commodity you're looking at, clearly we know there's weaker settings there, which is why we've got some downward pressure on commodity markets in US dollar terms. And look, I'm not a grains and oilseed expert, but if you looked at, the animal protein sector, we know that there's still, there's sector-specific trends that are still supporting or driving markets to a certain degree. So, in China, there's still a protein shortage because of the African swine fever over there. So that's supportive of, animal protein prices broadly around the world. We know, from a dairy perspective, we know that there's very, very strong competition for milk amongst dairy companies in Australia. So that's supporting farm gate milk pricing, particularly here on the East Coast, And when it comes to grains and oilseeds, we know clearly after the last couple of years of drought on the East Coast that, carryover stock's very, very low. So there are those local drivers that are impacting commodity markets, but broadly speaking, not surprising, commodity markets are weaker, but they certainly haven't crashed in most respects, depending on which commodity you're talking about. And I think that's encouraging. Look, just a bit of a plug for our research team. Every month and every quarter we provide more in-depth commodity market outlook reports. And this is just the one a summary page from the monthly report that we produce. And I know for the audience there's probably a lot of interest around our views on where things are going with grains and oilseeds markets. And I do know our team, led by Cheryl, will be releasing our latest crop update, I think in the week of October 21, so in a couple of weeks' time, that will provide our latest update on that. But we do, every month, provide some commentary around local and global, grains and oilseed prices as well. And another key input, a key one there would be farm inputs. We've got a team that's dedicated to farm inputs, which picks up everything from crop protection chemicals, to seed, to fertiliser. And we certainly, track and have views around where fertiliser prices are going and things like that. And this is the most recent commentary around that. So, look, I just encourage everyone you can get those reports free through our branch staff. So make sure you get access to getting those reports, because they're probably the best, more in-depth summaries of what's going on across the various commodities. And I certainly don't want to pretend that I know much about grains and oilseeds markets when that solely relies on you guys in the audience would know a lot more than I do, and so would our grains and oilseeds team over in New South Wales. So I know I've only got 20 minutes or so, so I just wanted to recognise that there are positives clearly, which we're seeing the ag sector perform really well, but there are some challenges and there's some negatives. I mean, and clearly weak economies for our export markets is a key one. Clearly if you're a food and beverage company in Australia and you've got a food service business, that's still problematic. And you can't dismiss how much disruption there has been to a certain degree for some commodities and sectors in terms of supply chain disruption. But the big issue in most of Australia at the moment is for ag sectors is access to labour that they need given the movement restrictions. So it's not all positives there. There are some challenges, but I think broadly speaking, I think one thing that will come out of all this is, hopefully, the urban consumers will have a greater appreciation for how well our ag industry functions, how well it does in terms of producing high quality food, and and having access to food despite disruptions. There were clearly shortages of product on shelves and things like that from time to time, but broadly speaking, there haven't been any major disruptions. Yes, there's been some capacity constraints put on, meat processing. There's been some supply chain disruptions along the way, but nothing when you compare that to our global peers. So I think that's a positive. And just more broadly on that, there's clearly still government support which will support consumers. We talked about those localised drivers in terms of low starting stocks in terms of particularly the grains and oilseed sector, which will support hopefully commodity markets, and of course hopefully we're all having better seasons and and no major droughts. Competitive disruptions, which I've already talked about, and I probably have already touched on it as well. You can't dismiss the big impact that the animal protein shortage in China is having on animal protein markets around the world. That's still in the background there, that they are short of animal protein. There's an insatiable demand for protein in China because of that slow recovery to rebuild their herd over there. So but before I just take some questions, I'll just look if I can summarise in 4 simple points. We know most commodity prices have fallen in local currency terms since the start of this year, but not crashed. And I think that's a good thing, given you look at what's actually going on around other food markets around the world trying to deal with coronavirus and the impact of government restrictions. There's no doubt we're in a good space in that we are past the worst of the global recession and we are in recovery mode, but it will be slow, and there are risks around second waves and a delayed recovery if things get worse before they get better. But broadly speaking, we always come back to our roots here and know that in a global crisis, food and agri is always well placed, and not surprisingly, Australian agriculture we think is largely going to weather this storm, and we're watching with great interest around what's going on in the rest of the world. So that's the formal part of the presentation. I'm hoping you heard me clearly enough, and I'll just stop sharing there and hopefully take some questions.
Hi Michael, do you have any comments on the wool market?
I missed that. Any comments on the
wool market?
Well, it's a good question. No, I don't. Sorry, no, I really don't. I guess it would come back to. Clearly, China's an important player in that space, and again, it would come back to. There would be some positive signs coming in around where China's economy is at. If I go back to what I said earlier, they avoided a recession. And if you looked at the more recent GDP numbers coming through, it shows you that it's quite a good bounce back in the most recent data. And with things trending the way they are, consumers are out, and we are seeing an increase in spending, because that's going to be a key in terms of getting the Chinese economy going again, and getting the manufacturing sector up and running again. But broadly speaking, I wouldn't like to comment specifically on our view on things, but it is one sector that we do cover, I should say.
Michael, can you just turn your camera back on? We want to see you in the video.
Yeah, no worries. Sorry, how's that?
Yes.
Michael, have you got any comments on the game the Chinese are playing? What's next?
Yeah, I do. It's clearly, there are a number of trading partners that have got some issues with China at the moment, but there's no doubt, relations between Australia and China aren't great, and they seem to be getting worse before they get better. And I've seen that you only need to look at this year. We've seen, not intervention, but we've seen government involvement in, 3 of our biggest export sectors into the market, barley, wine and beef. And you could throw in there dairy if you looked at, I'm not sure if you're aware, but there was a Chinese company trying to buy the lime business here in Australia, and they were waiting on firm approval. Where the two parties, the Japanese owners and the Chinese buyers, just walked away from the deal because they didn't think they were going to get further approval. So if you looked at the landscape, 4 major sectors that we export into China have had some headwinds just in this year. It is a real issue. It's a key export market. We are heavily exposed to that market, so I don't think any food and agri sector wants to see relationships deteriorate any further than they have. But it is a risk. and I guess it's a sector by sector response that we know that, the simple reality is it's a key market because it's such a big market and it's growing so rapidly. Fortunately, broadly speaking, most sectors have a good spread of risk across export markets. That's why we look at Southeast Asia as a key region. We've got the Australian markets a key platform. So that's the risk management part of it. But I think clearly I think we're just in for a period of time where there's going to be heightened tension, and hopefully things don't deteriorate, but it won't be a rapid recovery in terms of relations, I wouldn't have thought, anytime soon. But a good reminder, we do need to manage that relationship. When you look at in total export dollar value, that is our biggest export market. And a number of our key sectors have China as our largest export market. So that's the risk, yeah.
Michael, have you seen us pivoting to other markets at this stage? Can you see that data?
Go again. Sorry, just missed the first bit.
Okay, can you see us pivoting to other markets at this stage?
Look, I think that's why, we always talk about Southeast Asia because there's some short-term headwinds in those economies because they're dealing with COVID-19 and a weaker economic setting there. But broadly speaking, they are markets that are, once we get past the economic crisis, we're going to see them return to be some of the fastest growing markets in the world and economies in the world. If you look at their trade agenda, most of Southeast Asia markets are fairly liberalised. They have a strong recognition that they're not self-sufficient and they don't have really strong ambitions to be self-sufficient in a lot of food markets, so they know they rely on imports. So they're a little bit probably more, a little bit more liberal in terms of making sure they've got good trade relations with export partners. So we always look at that region as a key region to sort of de-risk from China, but recognising there's some short-term headwinds there. But we expect them to be key markets for a long period of time.
Yeah, g'day Michael. Just wondering what the key drivers are for the dollar. You're sort of predicting the dollar to go towards 65 cents. What's the general reason of that?
Yeah, well, very simply, a lot of it does hang on the view that we still think that there's going to be a bit of a sluggish recovery in China, and that's such a key market for us as well. I haven't got it in front of me, I can't bring it up. I think it's 68 cents on a 3-month view, so I know, what are we at, 72 cents today? So that's the view that we'll see drift a little bit lower, but broadly on the back of, some challenges, one around our local economy, on the back of a weaker China economy as well. But that's the fundamental view from the economists. And I haven't looked what the consensus view is. I know there's always a spread when it comes to currency, but I haven't actually had a look at what some of the other major banks are saying, but it is in that ballpark between, low 70s to high 68 cents, I think, where most people are expecting, yeah.
Thanks, Michael, for doing this for us. I hope we gave you a bit of relief from not getting out in Melbourne.
Thank you very much. Yes.
If everyone would like to thank Michael, that'd be great.